Hello everybody, welcome to Pathfinders trainings. The heading of this video, I have given stock market in 2019, the year of the bear. So this is what the charts are telling us. 2018 has passed, we are in 2019, and let's see, this line is the start of 2018, and we see in this year, the market remained flat. In fact, for most of the people, the returns were negative. These 50 stocks of Nifty were still a little positive. But other than that, most of the stocks that we saw here were negative. The small caps were hammered, the mid caps were hammered, and a lot of large caps went down. So 2018 has not been a good year. And if I look at the candles, this is how it has gone. There is always a period of retracement. For example, here in 2014-15, we had a year of Teji, then there was a year of Mandi. Now again, it rallied and retraced, rallied and retraced, rallied and retraced, rally, and a retracement is expected down from here. As I've been always saying, that I keep on saying the market is expensive, and that's a fact. The PE of the Nifty at this moment is about 25.8 is the last figure I remember. And the average PE of Nifty at around 20 is healthy. So this is a level that you cannot rule out, about 8,000. And the market has not gone up. And if you see clearly here, we have a very prominent head and shoulder being formed here, which is a bearish sign. And those who are aware of the technical analysis, you can see that it is going down. The market has been very sideways for the whole year, going from upper end of the Bollinger to the lower end, to the upper end, to the lower end. And we see the volatility has actually expanded. From February, we also have the weekly expiries of Nifty, which hopefully will give more liquidity to this market. So before I go ahead with the analysis, let me close my positions. Here, these are all the positions that I take in the trading room. And one query that most of people ask me is, can I do intraday trading without looking at the market? And that's what we keep on trying. And now we are working on a new strategy where we trade the market only for 30 minutes in a day. By 9:40, all our trades are taken, and then we look at them only after 3:30, because there is an auto trade and most of the trades are automatically squared off. So this one I'll square off now. I have no intention of carrying it till Monday in an uncertain market. So let me square off everything. Yes, so I finished with a profit of about 13,900, and the capital I utilized in this was about 2 lakh rupees. So that is a decent return. Then here in the stocks, we take those trades in the morning. The 90% of the time goes in the analysis. Then we have a strategy by which we trade. And the whole logic of the strategy is that your winners are bigger and your losers are smaller. So here, let me go and see what did it give me today. So today, I booked a loss of 1,734 rupees. Let me go and log it. I take the same risk every day. And this is a strategy we all test together. We all test together. That means not only I take the trades, my students all take trades, and we work on this strategy. And 1,734. So today I finished with minus 1,734, and this was a loss, and I'll mark it. So every day On a capital of 2 lakh rupees, I take a max risk of 10,000 rupees, divide it into multiple stocks, a strict set of rule. The profit potential is bigger, loss potential is smaller. And as you can see, now this is our 15th day. Every strategy I test for 40 days with real money. Profits are 9, losses are 6. So the success rate is 60%. We are targeting more than 70% by improving on the system. And as you can see, I'm getting a good profit to loss ratio of 3.8, made a profit of 54,000 rupees, a loss of 14,325 rupees, and returns of 19% in this 15 trading days is what we have got here. So that's the way you can test the strategy. So let me update it since profit will remain the same now. I finished with loss, so let me add the losses together. So now the new figure of the loss is 16,059. 16,059. So roughly about 19% returns, 3.4 profit to loss ratio. And overall today, I booked a medium profit of about 14,000 rupees. And it is this new strategy that we are working on right now in our trading rooms. And this is my 1, 2, 3, 4, 6th straight winning day. I had a loss day, 2 winning days, 2 loss days. Profits and losses are part of the game, but as long as your profits are bigger and your losses are smaller, you will do well into this market. Let's go ahead, analyze the market. Now, if I look at this market here, now let's first check what are the various levels possible for this market. Employment generated enough? No. Fantastic growth happening in the newspapers? Yes. But when you look at reality, no, not really, not that great. The whole world is also very expensive, and a trigger can be France that I was reading, reading in. So be careful, because we are in an election year. May elections are there, so uncertainty will be bigger. So let me draw my levels. Here. So this was the move that started in January 2017. So from 2017, one full year, you saw a big rally. After the demonetization, a big rally happened, but then it fizzled out. And now we are seeing that this rally is not there anymore, and there is a downward pressure coming. Now, this level, the market tried to breach up for many weeks, 1, 2, 3, 4, 5, 6, and is traveling down. And from here, this looks to be the next level. What we have seen with experience, market tends to travel from one level to another level. Then this is a 50% retracement where it has tried to come 2 times, and now 3rd time. This is again the likely level 9864, and before election, this can be the level that we can look at. 9,400 rupees is a possible level that Nifty can go up to. So a lot of stocks, have already started, going down. They have started correcting. Let's look at some of the market leaders like Reliance. You see, Reliance has also been continuously coming down. After this high it made, it never recovered. And if you see, this is a flag pattern. And price has been traveling down, and on a lower side, to come and touch this Bollinger, it can come down to about 1000 rupees level. So about 100 rupees of downside I can see right now into the market in Reliance. And if I look at another expensive stock, TCS, these are all big names. And if you go back to my videos about 2 months ago, this is where I was talking about shorting TCS. Since then, we have continuously been short on TCS, and a fair value of TCS is somewhere around this level. This can be a level when I can think about buying it back again, but downward pressure till this level is very much likely. Please understand, most of the large caps are by default expensive, since these are the favorite stocks of the people. Now, the question comes, are there buying opportunities in this market? And the answer is very much. In the year 2018, the mid caps and the small caps and many large caps, they were hammered down. In fact, some have gone down as much as 70 to 80%. And if I'm getting a very good value-driven, profitable company at a 50% discount, I would love to take it now. In fact, we have started building our portfolio. We have already 25 stocks in our portfolio. And while this market has gone down, that portfolio has remained. And right now, is all my money in my portfolio? No, maybe about 20, 25%. 75% I'll be sitting on cash, and instead of timing the market, on every level, I'll keep on buying those companies because it is the same attractive business that is now available at a cheaper price here. So in this market, this is the possibility. I always say this is the kind of possibility you can look at here. That this are the kind of profits that are, and this one, am I satisfied? No. Here, we are just working on the strategies. Stock market is all about strategies. In my class, I teach more than 50 strategies. And in all these strategies, you are handling different kind of markets. Like this strategy that we are working on and trading right now is a strategy that is specially made for the office going people who do not have time for the whole day to look at the market. So they have to spend an hour a night before in analyzing and finding their trades, and only 30 minutes to wait for their entries. As soon as the entry comes, to take it, put the trade on auto and go to their office and look in the evening, the way I saw now, whether it finished in profit or whether it finished in loss. So another index is Nifty Bank. Unless this is never complete without looking at the Nifty Bank here. And you see, banks were very, very volatile in 2018. Look at the volatility in the banks. Same here. Let's mark it. It's 2018, and let's look at the banks. In fact, maximum volatility was in the bank with the non-banking finance companies, scams, lots of skeletons coming out of closet, some of the scams happening. So banks were very, very volatile. But as the banks are getting cleaned, this is one sector where attractive valuations have started forming. And I would be eager to wait for a correction of maybe about 1,000 points on the Nifty in the year 2019, and maybe buy some good banks for my long-term portfolio. For example, Yes Bank, I've always said, is a good bank. And now with the new management coming in place, you will see more stability in that bank here. In the auto space also, a lot of correction has happened. For example, if I look at the various sectors, let's look at how various sectors behaved in 2018. Auto was a beaten down sector. If you see, the whole 2018, all auto stocks were down, whether whether it is Maruti, Tata Motors, Mahindra, everything was down. And this was always an expensive sector. And now it is coming to its correct valuation. Some more selling is still remaining. Commodities, if you see in 2018, this was this is 2018 here. This was another sector which corrected, which was bearish. So instead of looking just at Nifty, the number 10794, it's a good habit to look at all the sectors and see how were various sectors behaving. Consumption was almost the same as the index. It was extremely volatile. The central public sector enterprises was bearish. Energy was very sideways, flat. 2018 was a tough, year for everybody. Financial services were the same. FMCG was a bullish sector with the Indian consumption story playing out, and this sector becoming more organized with a lot of international players coming in. Money is being committed to this sector, and there can be growth in this sector. Infra was a beaten down sector. IT was another bullish sector in 2018, and now it is fizzling out. From there, now there is a profit booking coming into this sector. Media was a bearish sector for the whole year. Metals was a bearish sector. MNC was bearish. Pharma was bearish. Private banks were sideways. PSC was bearish. PSU banks were bearish. Realty was bearish. And the services sector was sideways. This is another sector where I see nice valuations coming. Good valuations, good companies now attractive at cheap rates where buying can be initiated. In fact, we bought 2 real estate companies today. A small part we bought into that one. So as you can see in all this sector, 2018 was the year of the bear. It was already a bearish market in 2018, and what the charts are saying is 2019 is likely to continue. And when a bear market starts, it normally lasts 2 to 3 years. That is what is an experience from the past. First year is gone and the second year has started. So it is extremely important that you have the skill to trade the market short. Because if you do not know to short the market, like what do I do with this money? With this money, I buy stocks for the portfolio. So this 13,931 rupees, I will tomorrow morning use this money to buy stocks for the portfolio. In fact, in the last 1.5 months, I've been only buying, and my students have only been buying the portfolio stocks from the profits that we are generating from our intraday trading. So intraday trading, you should be very proficient at. In fact, it's a fantastic second source of income. If you want to learn more about all this, I have a webinar tonight, 9 o'clock to 11 o'clock in the night. It is online. And there I'll be talking about a lot of important concepts about how you can handle a bear market. It's coming, it's there. Last year was a bear. So how will you handle your 2019? And when the market comes down and that opportunity comes, your fear will stop you to buy anything at that time. And how do you initiate buying at that perfect level? And I'll be talking in the night tonight, what is your survival strategy in this particular market, and how will you take advantage of the falls and the retracements that are likely to come in 2019. So thank you very much. One more analysis session of the market by Pathfinders trainings, and please trade carefully. This is a great time to learn. Keep on building your portfolios. They will give you financial freedom. And I look forward to see you again into one more session. Do not forget to subscribe to the channel to get regular updates that I put on my YouTube channel. Thank you very much. God bless you.